All right, all right. Welcome back. In this lesson, we are going to be discussing what a pip is, what a pipette is, how pips are calculated, and how to calculate pip movement when it is a yen pair versus a non-yen pair. And a yen is the currency for Japan. So you will hear me refer to the yen, and that just means the Japanese yen. All right, so what is a pip? So for Forex currencies are quoted in pips, and pips that stands for percentage in points. So a pip is basically the smallest percentage of a currency price. Um, so in Forex, you'll hear people talk about catching pips and how many pips were caught during a move. So that is what they are referring to, how much movement price moved during that particular session. And so the best way to think of it is a penny compared to a dollar. So it takes 100 pennies to make up a dollar. So that's how you can think of a pip. So even smaller than a pip, there is a pipette. So think of dividing a penny into fractions. So a pipette, it takes 10 pipettes, or you may hear people refer to it as ticks when they are trading like indices and stocks and things like that. But it takes 10 pipettes to make up a pip. And so when you are looking at your lot sizes, when you see a 0.01, that is basically a pipette. So it would take 10 pips, 10 pipettes to make up that pip, or 10 ticks to make up that pip. And so when you are looking at the price on your charts or in your MetaTrader 4, the fourth number after the decimal is the pip. So in this case, you'll see 1.5612. The 2 is the pip, or 1.5613. The 3 is the pip. So as price moves either up or down, the pips or the pipettes is what's changing. So once 10 ticks has happened, you'll see the price of the pip, which is the fourth decimal place, will move. So most currencies are quoted in 4 decimals. However, there are a few exceptions. If you see a fifth number after the decimal, then that is the pipette. And the only currency where this would probably be different is, like I mentioned before, the Japanese yen. And I'm going to explain that as well. If you're not trading yen pairs, then this won't be a big deal, because most of the currencies will be the fourth decimal place. And so you'll see here, I have a quote for GBP USD. This is how it will look on the MetaTrader 4 app. So you'll see that fourth place after the decimal is the pip. And then you see the little small number after the pip is the pipette. So when you are entering your trades on MetaTrader 4, this is how your quotes are going to look. This actually shows you the base and the quote price for the particular currency that you are considering to be trading. And I'm going to also show you how it would look on a yen pair. So when you are trading Japanese yen pairs, it'll be slightly different. You'll see here that before the decimal place, there is 3 digits. After the decimal place, there are 2 digits. And then that last decimal place is the pipette. So you'll see in this case, you have 166.09. The 9 is the pip. And you have 166.11, and then the 0 in that case is the pipette. So for the pairs that have JPY in it. The pip is the second decimal after, the second number after the decimal place. And so not very complicated, but it is important for you to know this so that when you are calculating your pips, when you are setting your stop loss and your take profit, it is very important for you to understand those numbers on how to calculate those figures. And so as traders, when we place our trades, that trade is based on a lot size. And so when you hear me talking about risk management and not over leveraging your account, that is where the lot sizes come in. So there are several different types of lots. And the standard lot, which most new traders won't be using standard lots, is 100,000 units of currency. And so there are other smaller lot sizes, which you will probably be using depending on your account size, but you typically want to start with a micro lot or a mini lot. You don't want to be using a standard lot. And so here I'm going to just basically break down the difference in those lots. And so the standard lot, like I said, that's 100,000 units. And so when you enter your, when you enter that on your MetaTrader 4, that will be 1.00, not to be confused with $1. If you enter 1.00 as your lot size on your MetaTrader 4 account, you are telling your broker that you're willing to risk $10 per pip. And you definitely don't want to do that unless you have the account size to sustain that sort of lot. And so most times, if you don't have a couple of $1,000s in your account, you do not want to be using a standard lot. So remember I said that 10 ticks makes 1 pip. So if you are trading a 1.00, that's a standard lot, which means that each tick is $1. So that 1 pip would equal $10. Now, as a new trader, you're more than likely going to be using a mini lot or a micro lot. If your account is, say, $100, you're definitely going to be using a micro lot size, which is a 0.01. So that you're telling your broker that I'm willing to risk 1 cent per tick, which means that each pip is going to be $1. Also, a mini lot, you're telling the broker, I'm willing to risk 10 cents per tick. So just keep that in mind when you are moving, when you are setting your stop loss, so that you know that when the price is moving in either direction, that is how much you're either profiting or losing on that trade. So if you are new, if you have a small account, you want to make sure that you are using proper risk management. And the way to do that is by using the correct lot size. So remember, for the most part, you're going to be using a micro lot, a 0.01, or a mini lot, which is a 0.10. So moving right along, let's just say, for instance, I am trading Euro USD. That means that 1 euro is going to be whatever the quote currency is going to cost, whatever the quote currency is. So if I'm trading Euro USD and I enter a long position, which is a buy using a mini lot, which is a 0.10, and the price goes up 20 pips, that means that I would have earned $20 because each pip is valued at $1 each. Now, on the flip side of that, if I put in a buy for Euro USD with a mini lot and price goes down 20 pips, then I just lost $20 because that is $1 for each pip, and the trade moved in the opposite direction that I anticipated that it will go. So this applies if the USD is the quote currency. However, if USD is the base currency, then the value is based on the quoted price. So in this example, you'll see here, this is USD CAD. So I'm trading the United States dollar, which is going to be the base currency in this example. And the quote currency is the CAD, the Canadian dollar. So that means that $1 US is going to cost 1.3169 if I sell it, or 1.3171 if I buy it. So just keep that in mind, that the standard, the mini, the micro lots, that is based on if you are using a US dollar quote currency. So that would be the Euro USD, the any currency where USD is the quote currency, then that will apply. On the flip side of that, if USD is the base currency, then you're going to be looking at the quote currency to determine how much that particular price per pip is going to be. So how do we calculate pips? So you'll see here, I have a snapshot of a chart here. Let's just say, for instance, we got into a Euro USD trade at 1.01948, and we're anticipating that price is going to drop, which it did. You'll see here that price moved to the downside. And let's say our target was 1.00306. So we were anticipating price where we bought here, or we actually sold here, and we were anticipating that price was going to come down to this level. So the question here is, how many pips were made? So to get that answer, you're going to subtract 1.01948 from 1.00306, which is going to give us 0.01642. So to get that answer, you're simply going to move the decimal over 4 decimal places, which will give you your answer. So you're going to move that decimal over 4 spaces to the right. That is going to give you your answer. So in this case, with that move, we would have earned 164.2 pips. The amount earned would be determined based on your lot size that you selected when you entered into the trade. So I know you're probably like, okay, am I going to have to do this every time that I enter a trade? I just taught you the way to do it, which is the hard way to do it. But of course, inside of MetaTrader 4, there are tools to help you be able to calculate your pips. And you always want to determine your risk before you enter the trade. And so here to the right, inside of your trading view account, you're going to see this little tool, the ruler. All you're going to do is position this at the top of your position where you're going to be getting in. Let's say, for instance, you want to determine what 20 pips will be. You can drag that down till you see this number is 20, and that will tell you to the right where you need to be putting your stop loss. But in this example, based on the trade that I showed you before, if I were to drag this tool down on my trading view, you'll see here 164.2, which is the answer that we got from subtracting our entry from our exit. That showed us that the pip count would have been 164.2. So that is how you can calculate your pips without having to manually do that or use a calculator or stress yourself out about trying to determine how many pips each move is or how to determine your stop loss. So you can always refer to the measurement tool on your trading view in order to determine the number of pips that your trade has moved, or to determine your stop loss and the amount of pips that you're willing to risk. So why this is important is you need to know how to determine your profits and your stop loss, the maximum amount that you're willing to lose on the trade, and to also allow you to manage your trades and calculate your risks correctly. So you always want to make sure that you are adding in your broker's spread when calculating your risk too. So say, for instance, your broker is charging $5 spreads per trade, and your spread can also vary based on the time that you are trading as well. So you want to make sure that you're taking that into account when you are determining your stop loss and your risk. So if your broker is charging 5 pips, then you want to add those extra 5 pips in when determining your risk and setting your stop loss. And we will go over that more in depth in a future lesson. I just want you to understand what pips are and how to calculate them so that you can make sure that you are determining your trades the correct way, that you are not over leveraging your account, and that you understand how to calculate your profits. So by now you should understand what a pip is, what a pipette is, which is also referred to as ticks, how to calculate your pips, and also how to calculate pip movement with a yen and a non-yen pair. So if you are trading USD JPY or GBP JPY, then you're going to want to make sure that you understand that it is the second decimal place after the decimal when you are calculating those yen pairs. So pretty self-explanatory, pretty straight to the point. For your homework, I want you to do 2 market execution trades on a demo account. I want you to use the measurement tool that I just showed you how to access on TradingView. I want you to determine a 50 pip take profit. And I want you to also use the measurement tool to determine a 10 pip stop loss. And you can feel free to drop those screenshots below under this lesson to show that you've completed that homework. Or if you don't want to do that, that's totally optional. But I just want to make sure that you understand how pip movement is calculated and what exactly that is, because in trading, that is going to be very important. And you're going to hear that referenced a lot when you are, in trainings or when you're watching YouTube videos and things of that sort. So pretty easy. So I will see you on the next lesson. If you have any questions, don't hesitate to drop those below, and I'll be sure to get those questions answered.